There are some pretty major problems with Canada's economy, and they continue to make the headlines in Canada's mainstream media. Today, I am going to go through a few of these headlines. I've had a lot of requests from people to start making more news-oriented videos rather than just purely data, and so I'm going to give this a shot. A couple of headlines I'm going to go through today. The first one is that real estate needs to become a bad investment in Canada. And then the next one is going to be this CBC report, which has 128,000 views on YouTube already, and kind of discuss whether or not real estate is even a good investment in Canada. Next, I'm going to talk about mortgage delinquencies rising 24% in Canada and 1 billion in mortgage delinquencies in the province of Ontario from Equifax. I'm going to talk about how the Bank of Canada says stagflation risks have dissipated. I'm going to talk about how Canada's rich are getting richer according to the Statistics Canada report. And I'm going to talk about how RBC feels that homebuyers are playing the waiting game right now. And then finally, I'm going to show some data that indicates that international student applications from India are in a deep decline into the month of March 2024. Welcome back to my channel. Before we get started, if you could hit the like button, hit the subscribe button if this video brought you any value and if you'd like to see more of them. And if you enjoyed this video, we have hundreds more hours of content just like this on realist.ca. We have both a free group and a paid group. If you want to check it out, there is a link to book a call in the notes below. First headline here says, real estate needs to become a bad investment. You want to make housing more affordable? Real estate needs to become a mediocre investment. The article says that the unfortunate math underscores a fact of life that rarely gets said out loud. The better that housing does as an investment, the worse it is at providing affordable shelter. Now, you can contrast this to the CBC video that shows how so many condos are sitting empty and actually not earning a return at all. So if all of these condos are sitting empty and not earning a return or earning a negative return, I would argue that those are pretty much already bad investments. And the owners who own them that are losing money are allowing them to be rented out at a cost lower than the cost of owning them, which means that they actually are good at providing affordable shelter, because otherwise the person who wanted to occupy them would own that unit and it would cost them significantly more. The article goes on to show that falling interest rates won't help to improve affordability much, and that house prices would need to come down. If housing continues to be a good speculative investment, if values continue to increase the way that they had been in the past when people were piling in to try and get into that speculative trade, in that case, it fails at providing affordable shelter. The faster home prices climb, the worse affordability gets. This is a little bit of a dislocation around the fact that there is a landlord-tenant mechanism where units can be provided at a lower cost than their ownership cost. And that ownership isn't the only tenure of housing in Canada. In fact, it's only 66% of the tenure of housing in Canada. And a lot of the time when I say that, who's going to provide rentals to these people, even in some of my most recent videos, there's comments saying anyone who rents would prefer to own. It's like, well, we don't really know that. There are a lot of people who actually don't want to own homes and feel that it's a better financial decision to not own. And in many cases, that's empirically verifiable, that it's actually a better financial decision or better investment to keep your capital elsewhere. This next article here says Canadian mortgage delinquencies rise 24%, and Ontario just hit $1 billion in delinquent mortgages, according to Equifax. This is an article from Better Dwelling. Canadian mortgage delinquencies are on the rise, especially in expensive regions and more credit-sensitive regions like Ontario and BC, where people had to take on more debt in order to be able to afford a house. Despite a slowdown in borrowing, Canadian households are still piling up on debt at a worrying rate. By the end of Q1 2024, it had climbed 3.5% and to a staggering $2.46 trillion in household debt. Ontario's delinquent mortgages crossed the ominous mark of $1 billion, which shows that we have this huge debt pile that we're sitting on. We've never been sitting on a debt pile this big before, and this is obviously going to have a big draw on the economy if rates don't start coming down to provide relief on that capital owing. So if you follow the economy at all, you know that stagflation is one of the worst things that an economy can possibly experience. And the Bank of Canada official recently came out and stated that stagflation risks have dissipated in Canada's economy. Stagflation is an economic situation characterized by stagnant growth, so no growth in GDP, but high inflation or persistent inflation. There was a period of time when the Bank of Canada had a chart showing the risk of stagflation. To be honest with you, I think we already experienced that period of stagflation. So I don't know if we're necessarily at a risk of, I think the risk has already been realized. I don't think that there's a risk in us experiencing it again because we're already experiencing the contraction effects or the deflationary effects of what it looks like on the other side of a stagflationary environment. I would say that we were probably in a period of economic stagflation for the better part of a year. Next article I'm going to look at here shows that Canada's rich are getting richer according to the Statistics Canada report, with 90% of Canadian wealth now in the hands of homeowners. Here's why this is happening in Canada. The richest Canadians are seeing their net worth increase with an average net worth of 3.3 million, while those in the lower end of the spectrum are recording debt that surpasses their assets, so they are at net negative net worth. 90% of Canadian wealth was in the hands of people who own homes as of the fourth quarter of 2023. So this is where you start to see that continued disparity taking place in Canada as a result of people who hold assets and people who do not hold assets. And this is how you can go down the path of seeing a K-shaped recovery exist in the economy, where one class of asset holders or one class of the economy recovers a lot better than another class of the economy, where asset holders benefit from inflation and non-asset holders are victims of inflation because they do not own anything that is pegged to the value of that inflation. The final headline that we're going to look at today is RBC's monthly housing market update. They show how home resales in Canada are pretty low off of that peak that we saw in 2022, with Ontario specifically seeing an exceptionally soft spring in a balanced market territory, not yet trending into a buyer's market territory, with like the last time based on their metrics that we would have seen a buyer's market was in like 2008. RBC also shows the Canadian house price index trend on a steep downtrend again after a pretty stable period of slight growth that we saw. And while RBC does seem to mention that homebuyers are playing the waiting game, or that they might be waiting to get back into the market, I think the reality is that homebuyers just simply can't afford to get back into the market. Something like 10% of Canadians can actually afford to qualify for a mortgage to buy the average Canadian house. And so it's not that people are sitting on the sidelines waiting and eagerly hoping to buy when something changes in the market. It's that they will perhaps enter the market when they can actually qualify for a mortgage and become a buyer in the market, which isn't the case right now given prices and interest rates. So I hope you enjoyed this look at the economic issues that are facing Canada and making headlines in Canadian real estate. Today we covered how real estate needs to become a mediocre investment if we want to dissuade people from investing and get housing more affordable. But according to the analysis from CBC News, they are kind of already there, with condos providing rental housing at a lower cost than ownership of those same units. We also took a look at how the Bank of Canada no longer feels that stagflation is a risk to the Canadian economy, and how Canada's rich are getting richer according to a Statistics Canada report. At the same time, mortgage delinquencies are rising 24%. The last one I forgot to mention, which I said I would put in here, is that we can see a huge decline in March, the yellow line here. This was posted on Reddit on r/Canada Housing, that we saw a big decrease in international student applications from India into Canada in March of 2024, where we would typically see something like 24,000 applications in March. We saw about 4,000. So either the word has gotten out that this program is not favorable for these applicants, or they are moving to some sort of alternative stream of application in an effort to continue to move to Canada. Something is happening here, and it's worth paying attention to, given that this is the biggest driver of population growth in the Canadian market right now. That's everything I have for you today. Please remember to, if you enjoyed this video, hit the like button, hit the subscribe button, leave me a thoughtful comment. I love having discussions in the comments with people. I feel like I always have really great discussions, and always helps me to think differently about the content that I'm making. So I really appreciate those alternative perspectives that you're putting in the comments. It also helps me to be more clear in my communication, because I find that I miscommunicate a lot of the things that I intend to say. And then finally, if you enjoyed this content, please remember that we do have hundreds of hours of content just like it on realist.ca. There's a premium group and a free group. On the free group, we have free webinars on a monthly basis. The last webinar that we did was a distressed deals webinar, and there are recordings available for that.